Bill.
Thank you very much, Werner, and thank you for braving through that voice. That was terrific. I want to thank everybody for being here, and thank you for your interest in SAP. We had our best year ever in 2011. It was the biggest year in the history of our company. So as we go into our 40th year anniversary, we are ever excited about the progress and the momentum of SAP. First of all, we achieved 25% growth in software revenues on a constant currency basis, 17% growth in software and software-related services, and an operating margin improvement of 110 basis points. Obviously, not only did we outpace our own expectations and that of the financial markets, but we also significantly outperformed our competition. For example, we are now 2 times the size of the number 2 in our marketplace. And if you compare our growth rate this quarter to theirs, we're growing 5 times faster. If you think about our software license sales in Q4 alone, that is bigger in revenue terms than the entire Salesforce.com company. So we take this momentum forward into a strong guidance, as Werner said, and we realize that our pipeline going into this year is stronger than it was last year. So we're quite optimistic about our progress going into our 40th year. Let's talk about the regions, and I'll try to give you some color. First of all, in the Americas, what you see with their 25% growth is HANA and mobile was about 144 million euros in actuals. And by the overall growth rate of 25% in the Americas, you can see this collaboration between the innovation and the core growing hand in hand. The innovation sometimes pulls through the core, other times the core will pull through the innovation. But innovation really matters in this marketplace. In EMEA, we are 3 times larger than the next closest competitor. And what's really interesting, while other people have talked very conservatively or negatively about Europe, we continue to be bullish on it. We grew in double digits across the board in EMEA, Germany, UK, France, Nordics, Italy, and even Portugal. And I want to call out Germany, because Germany had an exceptional year in 2011, growing at 23% on a full year basis. This represents great upsell and cross-sell, so as you innovate more and more, you capture that in large markets like Germany and US. In Asia Pacific and Japan, we're 2 times, actually 2.5 times larger than the next closest, and we're growing very fast, as you saw, 32% year over year. But what's fascinating is in places like Japan, we have quickly become the standard. We're growing at 90% year over year in Japan. Emerging markets continues to be a major emphasis of SAP. As you know, we've made big investments in China, which we announced that we'll spend $2 billion between now and 2015. We also developed SAP Labs, sales, marketing, and ecosystem in Russia. And our emerging markets growth continues to be robust in India, China, Mexico, and Indonesia, and most of those markets are growing well beyond 50%. And in 2012, we're going to put a special focus on the Middle East and North Africa with an ambitious growth plan there as well. As Werner said, we're harvesting what we have today on the innovation curve, but we're also looking at new markets where we can grow this franchise called SAP. Customers are embracing our strategy. I think this is a very interesting situation, because if you look at our business in core and analytics, it's growing very fast. And we think that it's because of our deep domain expertise in 24 distinctly different industries where we serve small, medium, and large clients alike. So it's the breadth and the depth of the portfolio. The innovations are outstanding. HANA is the fastest growing product in the history of SAP as measured by sales performance. We did 160 million euros in HANA, and we only had the product for 2 generally available quarters. That was the third and the fourth quarter. SAP